So there's a lot of talk in the marketplace about feeder funds, fund of funds. And so I wanted to go over a little bit about the basics of what exactly is a feeder fund, what's a fund of funds, how are they all related? And it's kind of easiest just visually to do an org chart. So let me share my screen. And all right, so here you can see this is a typical fund structure. So up on the top, in the yellow, you've got your investment asset, whether it's real estate or you're invested in a company, whatever the investment is, that's the asset up on top, the yellow. Then the gray box is the actual fund itself. So this is an investment fund, whether it's a real estate fund, crypto, hedge fund, private equity, whatever it is, limited partnership or an LLC that owns the underlying assets that it's invested in. And then the green off below is the limited partner or investors, basically, that invest capital into the fund that they use to buy the assets. And then over next to that is the GP, the general partner, or the manager of the fund, the one that makes the investment decisions, runs the fund, and then sponsor below. It's usually owned by the people who put the deal together, asset managers who find the deal, create the fund, and then they get paid essentially usually through this general partner entity down to the different sponsors involved. So when we look at, let me just flip down to, we have a bunch of different types, but okay, so feeder fund. What is a feeder fund? Feeder fund is essentially another investment fund. It's a completely separate legal entity that's set up for investors to invest into that feeder fund. Then the feeder fund takes the capital, flows it up to the master fund. So the main fund, the one that's investing in assets, is typically referred to as the master fund. And so that's investing in whatever it is, let's say real estate. The master funds owns the real estate that you're investing in, like 5 different properties. The feeder fund raises some of the capital and then flows it through up to the master fund. That's done. There's a lot of complexities to it. Sometimes there's different structures based on whether someone's a US investor or a foreign investor. If they're tax exempt, there's different tax issues. So there's a number of reasons why you do a separate feeder fund, but usually the feeder fund is tied to just this one master fund. And as you can see down below, the GP, general partner, the person in charge of running the feeder fund and the master fund are usually the same people. So they're all kind of related to the same deal, same fund. It's just sort of a subsidiary of the master fund for raising separate capital. Now, and some of this could be like an offshore feeder fund for international investors, like a Cayman Islands feeder fund that will help certain offshore investors from other countries avoid tax reporting in the US. Now, a fund of funds is similar. You're raising the fund of funds is down here in the middle, the gray box. That's also an investment fund, limited partnership or an LLC usually. And that is set up to raise capital from investors. It has a general partner or a manager, someone who's running the fund of funds and making decisions. And the difference between the master feeder structure and a fund of funds is diversifying. They're investing in multiple different funds or investment opportunities. So it's a pool of capital that a bunch of investors put together. And then they say, the person running it says, okay, I'm going to put 20% of the capital into fund number 1 over here, some of it in fund 2, some of it in fund 3. So they kind of diversify amongst numerous different funds. And some of them could be a real estate fund they invest in. It might be a hedge fund. It might be a private equity fund. They can invest in multiple different funds. And the fund of funds doesn't have a say necessarily in those underlying funds on here, fund 1, 2, and 3. They're usually just a straight investor. They're not general partners of those. They don't really have a relationship to them in most cases. They're just investing in them as an investor versus going back to the prior slide. The feeder fund is actually tied to the master fund and it's not diversified. It's just investing in the one fund. And both of these, the fund of funds can be used on a number of different ways. Sometimes it's to, diversify a portfolio someone wants to invest in. Sometimes it's a matter of fund number one might be a large hedge fund or something else that requires $250,000 minimum check size to be able to invest. And the fund of funds investors only have 50 grand. So they're pooling their capital in the fund of funds to be able to write a $250,000 check to be able to get into fund number one. So it allows access to the underlying investors of the fund of funds into diversification, into potentially larger investment opportunities that they might not be able to get into on their own. That's just a couple of the different reasons for the different types of funds, but essentially just think master feeder or a feeder fund is usually tied directly to a master fund. Fund of funds is something that invests in multiple different funds or different opportunities. So that's kind of the basics behind the different types of funds. When you hear people say a feeder fund or a fund of funds, they're kind of similar, but they're not exactly the same. So that's just a quick summary on that. Thanks for watching. Don't forget to subscribe.